Welcome back to the podcast, folks. Today we're diving into how Bitcoin is still battling price pressures, even with some tailwinds from the US labor market data.
I'm excited to get into this. So even though the jobs data seems weak, Bitcoin's struggling to bounce off its lows, right?
Exactly. Yep. Despite some positive signals from the labor market, Bitcoin got rejected around the $116,000 level at Friday's Wall Street Open. The price action has been hovering below that mark for 3 weeks now.
Right? And that rejection really sent shockwaves through the market.
Yes, and traders are watching the order book data keenly. There's evidence of dip buying here, especially on Bitfinex, which some see as a sign of a potential short squeeze.
Right. So, are we saying that even though fundamentals like the US non-farm payrolls data are prompting some bullish sentiment for a Fed rate cut, Bitcoin is still under pressure?
Exactly. The July non-farm payrolls came in at 73,000 instead of the anticipated 100,000, suggesting the labor market might be weakening, and that in turn ramps up the odds of a sooner rate cut, fueling some optimism.
That's interesting because on one hand, the data is boosting rate cut probabilities, but on the other, it sent Bitcoin price tumbling further, kind of mixed feelings in the market.
Yeah, it's like a double-edged sword. On the one side, the weak jobs numbers are encouraging traders to bet on a cut. On the other side, there's nervousness because tariff fears and liquidity issues are creating big uncertainties.
And speaking of liquidity, those order book liquidity clues are really fascinating. Traders are like ready for a squeeze near $120,000 if things line up.
Correct. The analysis indicates there are large blocks of short liquidations waiting as Bitcoin edges closer to that threshold. It's like a pressure cooker just waiting to blow off steam.
Yep, but here's what puzzles me. A lot of optimism seems to rest on these order book signals and dip buying. Do you think that kind of activity really provides enough support in a volatile market like this?
That's a good point. While dip buying on platforms like Bitfinex is a promising sign, it's important to remember that these are just indicators. They might offer temporary relief, but may not be enough to sustain a long-term recovery if macro pressures intensify.
Right, so while traders are leaning into the idea of a short squeeze, there's a lot riding on the assumption that the Fed will pivot soon.
Absolutely. Look, the market is clearly reacting to the possibility of a rate cut, as seen by the rising expectations from CME Group's FedWatch tool. Interest rate cuts can be a big catalyst, but as you say, they're still just prospects.
And that's where things get tricky, isn't it? Because then you have commentary, like from the Kobeissi letter, throwing a curveball by questioning the data revisions and the integrity of the job numbers.
Yes, exactly. The Kobeissi letter pointed out that the unemployment rate is creeping up and about 258,000 jobs have seemingly disappeared over the past 2 months due to downward revisions. That definitely stokes the debate on whether the labor market is actually in trouble or if there's something off with the data.
That's a critical observation. It almost feels like there are two narratives in play: the potential for a rate cut versus the anxiety over data reliability and trade tariffs.
Right. The backdrop of new US trade tariffs has already driven Bitcoin's price down to local lows around $114,000. So even with favorable jobs data pushing rate cut odds, the market sentiment is still cloudy.
And then you've got voices like Ted Pillows who are optimistic that Bitcoin will eventually grab that $120,000 threshold.
Yep, Ted Pillows and some other notable traders pointed out that it's just a matter of time before the liquidity squeeze kicks in to propel Bitcoin higher, assuming, of course, that the selling pressure subsides enough for a rebound.
Yeah, exactly. Also, Crypt Nuevo's chart comparisons with earlier price action seem to suggest there's a possibility of a vertical move coming if the momentum picks up.
Right. Crypt Nuevo drew parallels to Bitcoin's earlier moves this year, indicating that similar patterns might be on the horizon if short covering begins in earnest.
It's really like the market is playing tug of war between macroeconomic triggers and technical liquidity factors.
Exactly. It's like a balancing act. One hand is pulling with policy expectations, and the other is gripping technical market data.
Yeah. Now let's talk about the broader implications. Do you think the emerging narrative around possible rate cuts could fundamentally change the Bitcoin landscape? Or will these technical battles continue to dominate in the short term?
Great question. I think while a rate cut could boost overall investor sentiment and maybe provide much needed liquidity in the system, The near-term volatility will likely be driven more by these technical factors like order book dynamics and dip buying.
So, you're suggesting that even if macro factors improve, the inherent volatility of crypto markets means price action could still be erratic?
Exactly. And let me add, it's like the macro signals might set the stage, but the actual play is going to be called by technical traders monitoring, say, exchange liquidity and rapid fire market reactions.
And that volatility is what really keeps traders on their toes, doesn't it?
Absolutely. It's a dance between expectations and execution. The narrative of a short squeeze is enticing, but critics might argue that relying too much on that could be risky if the Fed doesn't move as anticipated.
That's a fair critique. Over-reliance on a short squeeze narrative could, well, backfire if the market simply doesn't align with the anticipated liquidity surge.
True, and it's important to note that every trading move involves risk. Whether you're following technical indicators on Bitfinex or watching FedWatch probabilities, the market can always surprise you.
Indeed. And with US President Trump weighing in and putting additional pressure on Fed Chair Powell, it's clear that even political factors can add another layer of complexity.
Yes, the political commentary, including pressure from Trump, only adds to the narrative that the Fed might feel cornered to act more swiftly. But history tells us that sometimes policy change can overshoot the market's expectations.
That's a solid point. So, summing up, it's a sort of cocktail of macroeconomic signals, technical liquidity strategies, and even political rhetoric that's making this period of Bitcoin trading truly unpredictable.
Exactly. And while the potential for a rate cut could serve as a tailwind, the market's response to those technical signals, like order book liquidity and dip buying, will be crucial in how Bitcoin reacts in the coming weeks.
Yeah, absolutely. It sounds like traders need to be prepared for a bumpy ride, regardless of which side of these narratives wins out.
Right on. The key takeaway here is that Bitcoin's price pressures are very much a result of both macro factors and technical trading dynamics, making it critical to stay on top of all these moving parts.